HYSA. What is that? In today's money lesson, we are going to cover the high yield savings account, or HYSA, or sometimes known as the HYSA. We are going to cover what they are, how they work, and why you need one. Thank you for joining me here today at Sisters for Financial Independence. My name is Catherine Agupjan. I am a personal finance educator, and I cover a whole range of money topics to help you get better with money so you have more money to live, give, and pass on to the next generation. I cover topics to help you understand how credit cards truly work. These are 2 videos that you can check out to understand credit cards, and I also cover step-by-step guides so that you can invest properly as well as get yourself an emergency fund. Thanks for tuning in, and let me know in the comments if you have any questions about high yield savings accounts. My goal at the end of this video is to make sure you put your money where it earns more interest, because we could all use a little bit more cash in this economy. What is a high yield savings account? A high yield savings account is a savings account but with better interest. The high yield means the savings account gives you a higher interest rate than your traditional savings account from your other banks. If you bank with Chase or Wells Fargo, you probably have a savings account, but that savings account is likely only earning you 0.01%. That's pennies compared to if you actually put your money into a high yield savings account. Right now, many high yield savings accounts are offering 3.5 to 5% in interest. That means your money could be earning more money even while you're sleeping. How can high yield savings accounts pay more in interest? Majority of these high yield savings accounts, they're part of online banks, and online banks typically don't have a lot of overhead. They might have a smaller staff, they might not have as many branches, and because they are able to save in those areas, they can pass on the savings to you by offering you higher yields on your money. Basically, when you put money into a high yield savings account, you are lending money to that bank. The bank uses that money to make other loans or investments, and the bank pays you interest. You might be wondering, why are high yield savings accounts such a big deal now? Why am I hearing about them everywhere? Interest rate on your high yield savings accounts are connected to the Federal Reserve's benchmark interest rate. When the Fed raises interest rate, your savings account rates also go up. But when the Fed cuts rates, then your savings accounts rates also drop. Now, for the past several months, the Federal Reserve has had a steady benchmark rate. They haven't adjusted it, but there's a lot of uncertainty going on in the economy, so that rate could likely change a few months from now. But for now, that rate is fairly static, and that means you can still take advantage of higher rates in your high yield savings account. That means if you move some of your hard-earned money into a high yield savings account, you could be earning more money while that money is just sitting in the account. So what are you going to use the high yield savings account for? The high yield savings account is for really any type of short-term goals that you have. If you are saving for something that you are going to buy within 3 months to a year, you want to be putting money aside inside that savings account. That way, it can add a little bit more as you continue to save. As the Fed adjusts the interest rates, then that rate in your savings accounts also adjusts. So you want to account for that, and you want to be planning ahead when it comes to the money that you're saving. Many high yield savings accounts only limit you to 6 withdrawals per month, and you might think that is really limited. Well, that is the point. The point of the high yield savings account is that you build up funds. So you should really limit taking money out, but instead deposit as much as you can so that you save more for whatever goals you have. Now, your goals can range from putting your emergency fund in there. Maybe you're putting in your house down payment because you're going to purchase a home within the next year. Maybe you're saving for a vacation that's going to take place 6 months from now. Keep in mind that the APY quoted on your high yield savings account could fluctuate if the federal rate changes. Now, it's also good to remember that the APY that is published means that your money has to be in that account for at least a year to benefit from that annual percentage yield. Now, for many people, a high yield savings account is a great option. But if you find yourself dipping and withdrawing from your high yield savings account, it could be that you are not budgeting. So you need to build a better budget so you are covering your expenses from your checking instead of your savings. I also recommend that you go through the process of creating an annual budget. An annual budget allows you to zoom out and see your expenses for the 12 months instead of a month-by-month basis. I know it's easy to do the month-by-month because many of our paycheck cycles are bi-weekly or bi-month, and it's easy to see our expenses that way. But the annual budget can help you plan ahead and see where upcoming expenses might come from so you can save for it and not be caught off guard and dipping into your high yield savings account. Keep in mind that the interest you earn in your high yield savings account is taxable. So at the end of the year, your bank will issue you a form called 1099-INT, and you must report that so that you can also pay the appropriate taxes for the interest that you earned. If you made $50 in interest in your high yield savings account, that amount gets added to your income. It's not a deal breaker, but something you must keep in mind so that you report it properly. People sometimes confuse high yield savings accounts with investment accounts. Let's clear that up so that you are sure the difference. Now, high yield savings accounts are still savings accounts. They're safe to use and they are FDIC-insured, so your money is safe. Any money you put in a high yield savings account also does not fluctuate with the stock market, so it steadily grows as you put money in there. Now, on the flip side are your investments accounts, like a Roth IRA or a brokerage account. Those are actually investment accounts, and within those accounts, you would buy stocks, mutual funds, or ETFs. And the balance on those accounts would fluctuate depending on the stock market. Now, you can have all of these accounts. You can have a high yield savings account for your short-term goals, as well as a Roth IRA or a brokerage account for some of your longer-term goals, or if you want to just start investing, start understanding what it means to invest. But the high yield savings account is not going to help you build as much wealth as you might want, especially for the long term. It's really for short term goals within the next 6 to 1 year, because the yield does vary and it could drop. So there could be potential that in the next few months you won't be earning as much money. But if you have the cash now and it's still sitting in a regular savings account, it might be a good idea to move that to a high yield savings account so at least it's earning you more. And on the other side, you can also continue to invest and put money into your Roth IRA and your brokerage and let that money grow for many years. If you are ready to move your money to a high yield savings account, I want you to shop around for the best rate. You can go to bankrate.com and scroll through what the options are. You can also visit your credit union to see if they have an option for a high yield savings account. You can also just check in with your existing bank to see what their rates are, but you want to shop around. I also want to caution you about getting paralyzed with decision. There is a lot of options for your online savings account. There's a lot of rates being floated around. I just want you to be careful about not taking any action because you're obsessing about a difference in APY. One bank can offer you 4.75% and another can offer you 4.65%. The difference is 0.10%, and if it's $10,000 that you're looking to put into your high yield savings account, that is a difference of $10. So instead of obsessing about that small difference, instead work on putting more money inside your high yield savings account so you can maximize and get more out of it. When you are finally choosing a high yield savings account, look for a reputable bank and make sure you read all of the terms and conditions. Some of the banks may have a higher APY because there's a lot of terms to it. They could have limits on the balance. They might require you to have a minimum balance. They might have other fees as well as charges. They might have tiers for your money, whereby the first 1,000 earns you a certain APY, and then the next 2,000 earns you another APY. So you want to be reading all of the fine print, and if it's too good to be true, there might be other catches with that account. So again, make sure you read through the terms and conditions and understand what the bank is offering you and how you can take advantage of that. I've personally used Capital One and Ally's high yield savings accounts to hold some of our money over the past many years. They are FDIC insured, they're safe, they have a fairly easy to use app, and I've also created sub accounts that allows me to save for other things. This is what it looks like, and this is how we ensure that we have money saved for a future expense so that we're not scrambling a little bit later on to withdraw money or figure it out from our day-to-day checking. That wraps up our money lesson on high yield savings accounts. If this video has been helpful, give it a like and share it with a friend. And consider subscribing to Sisters for Financial Independence so you have more money to live, give, and pass on to the next generation. If you want to become a saver, then I want you to check out this video where we talk about savings mindset so that you can change the way you think about how you save your money. And if you want to start investing so that you have money for the long term, then this video is going to be for you. Thanks for tuning in, and I will see you next time. Bye.